In today's video, there's 15,000 active listings. I'm taking a look at listings on a monthly basis. Furthermore, the Bank of Canada is set to raise interest rates again in July. How much more does that impact your pocket? Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, welcome to another video. If you're new to this channel, welcome. We like to talk all things Toronto/GTA real estate with regards to market trends, market facts, statistics, things you should know as a buyer, things you should know as a seller, and so much more. If you find any of this informative, feel free to subscribe. Furthermore, you can find my contact information with regards to my Gmail and my office information address on the screen and in the description as well. Feel free to get in touch with me if you have any further questions or if you require any help with regards to Toronto/GTA real estate matters. And if you want to do a little bit of your own due diligence and homework, feel free to just search me up on Google, find my Google reviews, and take a look at the feedback those who have worked with me in the past have provided. Anyways, enough of all that self-promotion. Let's get to the point of today's video. Here, according to this chart, which I made based upon contract date, so contract date here equals the listing date, the date which a property goes on market, we see for all property types across the GTA, total number of new listings peaked in March. Now, market conditions in March were far different. It was after the first increase, the first installment in terms of rate increases. And although the market was not as hot as February, because February was the peak market condition for 90% of properties in the city of Toronto and the GTA, nonetheless, the market was in a far better place with regards to prices and sellers' leverage as compared to today's market, which is obviously at the time of recording of this video is June 26th. Here, simply we can see that the 19,000 total new listings that we saw in March, a large portion of which can be attributed to people trying to take advantage of the peak market conditions in February. And at the time, once again, March conditions were much better, so going on to the market. But April was only short of March by a factor of around 2,000, where in April there was a total number of 17,000 new listings. And here it's important to note that this does not designate active listings, rather new listings. So for instance, in terms of April, we're taking a look at here, of the 17,000, some have sold, some have terminated, and some have suspended. And some obviously are still available onto the market, which feeds into our active listing number that we're going to get to shortly. Nonetheless, from April to May, we see a slight increase in total inventory, where in May, total number of new listings increases into 18,458 to be exact. And now so far into June, 26 full days into June, because this is being recorded June 27th. Maybe you're watching it June 28th. Maybe you're watching it in 2025. I don't know. It's weird if you're watching it in 2025. Nonetheless, 26 days into June, we are at near 14,000 listings, to be more exact, 13,898 new listings that have come onto the market. Although we have not fully finished June, here we can clearly see that the total number of new listings in June is going to be less than the preceding month. I think that's a fair assumption, unless in the last couple of days of June, we somehow clear 5,000 new listings, which I doubt that will be the case. So clearly listings, new listings coming onto the market, new properties available for sale on a monthly basis has been diminishing. But on the flip side of things, what has not been diminishing and the number that has been growing is total active listings. So listings that are not only new, but have stayed onto the market. These are listings that are brand new, listings that are price changed. So the listing number in terms of how much they're asking for has been changed, whether it's been changed from a bidding number that failed, so below market value strategy, and then you try to induce multiple offers and that strategy fails. So you have to price change into a market value number, or the reverse, you price it above what is reasonable, you don't get any offers, you don't get any showings, no interest, and then you bring the price down. Either way, price changes also account for active listings. Furthermore, extended listings where, the original expiry date of the listing, let's say, was, for instance, June 15th, but the seller decided to extend the life of that listing. So nonetheless, the total number of active listings at the time of recording of this video is at 15,482. So when new listings are going down, yet the active amount of listings available on the market is remaining around a high number and increasing. What does that tell us? Less listings are actually selling, more listings are actually sitting on the market. Hence, the active number is higher, even though the total new listing figures are decreasing. And this very fact that listings are remaining on the market for a longer period of time, sales to listing ratios are much lower, and days on market are much higher, is one of the reasons why I was kind of early to call it a buyer's market earlier in a couple of videos back, I believe early in June or late May, where I went through all the conditions that I was seeing on the ground and according to the numbers, where it led me to say it's a buyer's market. And right now, I think there's no question about that. It is a buyer's market. And that is mainly why listings are staying on the market. Now, it's a good thing for buyers, right? Because they have more negotiating power. Me as a real estate agent, when I represent my buyers, I can get better deals from my buyers. I can get them more conditional. I can use my buyers' leverage to negotiate overall a better deal. But will listing numbers stay this low and will buyers take advantage? Well, that has to do with rates. Because one of the reasons people list their property has to do with how much it's costing them. And those investors who own condominiums were the subject of my most recent video. Nonetheless, their carrying costs are increasing as variable rate goes up, as the Bank of Canada increases rates. And on the buy side of things, so not on the supply, now on the demand side of things, as rates go up, well, a lot of buyers can't actually purchase even though they're dealing with better market conditions, because so in a sense, interest rates has an impact on both the supply and demand side of things, motivating a lot of investors to go on market to cash out, at the same time having somewhat of a diminishing impact on demand. Now, how much more will you have to pay as rates go up, which is projected to be 0.75? Well, here we can segue to this wonderful chart created by one of my colleagues in my real estate office. I will put credits in the description. Honestly, he's one of the best real estate agents out there, and I do not say that about a lot of people. Here, according to this chart, we can see based upon borrowed amount and assuming variable, not only how much monthly mortgages have actually gone up year over year, but how much they're projected to go up with this 0.75 increase. That is, once again, no one knows for sure, but that is what the popular prediction, the popular consensus is. Based upon the borrowed amount of $500,000, $1 million, 1.5, and 2 million, of course, most people most likely fall between the 500 to 1 million. It breaks it down based upon segmented borrowed amount and additional cost. So let's, for instance, take an example of $1 million. For those who have borrowed $1 million, we see that when variable was at 1.55 on $1 million, they were paying $3,400. Now, when variable stands at 3.3, that has impacted the overall monthly to increase all the way to $4,300. And if the expected rate hike comes in at 0.75 and variable lands somewhere around 4%, well, guess what? That same individual who borrowed $1 million now has to pay $4,800 a month. What's most alarming, which once again, this is just interesting, I don't think a lot of people fall under this category of borrowing 2 million on variable, right? A lot of individuals who are borrowing up to 2 million are most likely not borrowing on variable, but nonetheless, in this case, it's interesting. We see that from June 2021, when variable was at 1.55, their total monthly was $6,900. If interest rates go up another 0.75, it's almost $10,000. Their monthly will be at $9,600 a month. And this clearly has an impact on the number of active listings on the market that we discussed earlier. Now, it's not a concrete science, right? Micro and macroeconomics are not like physics, math, and chemistry. They're not concrete sciences. Nonetheless, general laws of supply and demand apply. Anyways, let me know if you have any further questions. Feel free to get in touch with me with your questions or comment your questions below. As always, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. Thanks for tuning in and watching another video. You can find my contact info in the description box. Once again, thank you very much. Stay safe and stay tuned. Thank you.